Ladies and gentlemen, welcome back to another Bitcoin video. Today we need to discuss the imminent FOMC decision on Bitcoin and what that will do to the price action. Now, FOMC is basically the interest rate meeting the Federal Reserve holds every, I think it's a month and a half or so. Essentially, they discuss whether they're going to be raising interest rates and if so, by how much, and that's when they actually do it. So that's happening as per the countdown here in roughly 8 hours. By the time this video gets out, say 7 hours from now, and you can find the exact time that's happening on CME Fed Watch. Just type that into Google and go to FOMC/interest rates and it will come up. It also shows you the probabilities of certain rate hikes. Now, before I move forward, excuse the two clamps in the corner here. The green screen doesn't go any higher. I need to get that sorted out. There's two little dots here. Don't worry about it. But I wanted to discuss this because, look, we've got a 12.2% chance as per the market, as per Fed Watch, which is a very reputable thing. As per the market, there's a 12.2% chance that we actually don't see any further rate hikes at all. Now, obviously, 12.2% is not very high, okay? It's not a very high chance, but the reason why I'm bringing it up is because recently, up until basically 2 weeks ago, there was a very, very, very high chance that Bitcoin would be seeing a 50 basis point hike. And now we're not even getting a 1% chance of a 50 basis point hike. The chances of rate hikes, of the magnitude of rate hikes being large have decreased significantly ever since we saw what's been happening in the United States of America with bank bailouts. And the reason being is because they're printing a lot of money. And so there is a scenario, even though it's only 12% chance, there is a scenario in which we don't see any further rate hikes at all, in which case the bearish argument for Bitcoin is completely obsolete. Because, I'll tell you why, the bearish argument relies on there being quantitative tightening. And the bearish argument relies on Bitcoin bottoming out when interest rates top out. Look at what happened in the last cycle, for example, December 2018. This orange line on this chart here represents interest rates, and obviously the price chart represents Bitcoin. When we saw interest rates top out in December 2019, that is the exact, 2018, sorry, that is the exact same week that we saw Bitcoin bottom out. We also saw Bitcoin being very reactive to interest rates in the months that followed. For example, we saw a huge 200% rally on Bitcoin in this period after the low, and that period, that rally ended on the week that interest rates topped out and started decreasing, okay? Same thing with the COVID drop, for example. When we saw the COVID bottom, the bottom of the COVID drop being in, that is the same week that interest rates bottomed out as well. So, we've seen a massive correlation between, not necessarily a correlation, but we've seen a connection between, what interest rates are doing and the movements from the Federal Reserve through FOMC decisions and what Bitcoin does in terms of tops and bottoms. And generally speaking, if we're looking for a history, it's only one occurrence, but it was a very strong occurrence. If we're looking for a history, the bearish argument can be made up to say, when interest rates top, Bitcoin bottom. Now, here's the thing. There's a 12% chance that interest rates are already topped out. Now, I'm not saying that's likely because it's certainly not. But if they are, which is a possibility, obviously 12%, it's a possibility, that means the bearish argument completely falls apart because obviously we're nowhere near the bottom and we're at 28K, okay? And as per the bearish argument, Bitcoin bottoms out when interest rates tops. And if interest rates are already topped and Bitcoin's nowhere near the bottom, it's already bottomed out months ago, there goes the bearish argument, if you understand what I mean. Even under the circumstance that we see a 25 basis point hike, which is probably more likely as per the market right now, we are still expecting interest rates to top out in May or June, okay? Now, under the, the bearish argument here, using the logic of the bearish argument, where you're saying that when interest rates tops, Bitcoin bottoms, you would be assuming that Bitcoin will be dropping roughly, let's see how far it is to the bottom from here, 46% over the next month, or if it's going to be June, 46% over the next 2 months. Even that is very unlikely. So you can see here from what I'm demonstrating on this chart that the bearish argument has basically fallen apart. Okay, we've seen the 4-year cycle rarely prevail here, and it's great to see. I've been sticking by the 4-year cycle personally ever since the 2021 top. At that point in time, I thought there was enough evidence to stick by it, and I did do that. I was able to call the top very, very early in the 60K region because of the 4-year cycle, and I was able to call the bottom very, very early in the 16K region. We bottomed out at 15.4K because of the 4-year cycle theory as well. So even if it fails now, which is unlikely, I think it's going to work. I think the bottom is in. But even if it fails, it's treated me very well, and it's certainly treating the channel very well, and I don't think you should be throwing out the window before the kind of whistle is blown here, because certainly it does look like the bullish argument is a lot stronger than the bearish argument, just based on what I kind of discussed there and partially debunking the validity and the strength of the bearish argument. So interest rates, guys, in 8 hours, 7 hours by the time this video gets out, 12% chance of a current of no more hikes. And, you know, some would even argue it's a little bit more than 12%. Obviously, you can't really go against the market. But, I mean, the point is, you know, the Federal Reserve has printed $200 billion in the last couple of weeks, which has reversed 6 months worth of quantitative tightening. So, you know, we're back into quantitative easing to a certain extent here. They printed $200 billion. Let me say that again. They reversed 6 months of quantitative tightening, 6 months of pain that was felt by retail, pain that was felt by the average middle class, lower class person was reversed for $200 billion of printing. Okay, so there's a clear kind of, I don't want to say too much on YouTube because I know how this platform is, but let's just put it this way. It's dodgy business, okay? I'm not going to get too much into that. If you want to discuss that with me, you can go to my Telegram group, Telegram discussion group, discuss it there. But I don't want to say too much on YouTube. I don't trust this platform enough to get into that kind of stuff, but it's dodgy stuff, I'll tell you that much. So, yeah, regardless of all of this, regardless of the actual rate hikes themselves, 7 hours until the rate hike occurs, obviously we know how this stuff works by now. Higher inflation is bad. Higher inflation is bad for the, higher interest rates is bad for the markets. If we see, for example, a 50 basis point hike just completely out of the blue, that's obviously very bearish. If we see no more rate hikes, that's very bullish for the markets. It's bad for everyone else because of inflation. But it's bullish for the markets because obviously it means that the Federal Reserve is interested in quantitative easing. They're interested in printing more money. They're not interested in tightening the economy anymore. And so that would mean markets would go upwards. So if we see no more rate hikes, very bullish. We see 25 basis points, it's neutral. 50 basis points is very bearish. Okay, so that's kind of the way we're looking at it. And regardless of the actual hike itself, regardless of what the actual hike leads to, generally speaking, we do see massive amounts of volatility during periods of time like this. And we are aware at this point in time that Bitcoin is at major resistance. I mean, all we need to do, for example, is go to the weekly chart on Bitcoin. And this is what we really looked into quite a lot yesterday. Go to the weekly chart on Bitcoin, go to logarithmic, and understand that 28.6K, this red solid line here, it's a very, very strong resistance. It's a strong resistance because it was a strong support. And it was a strong support because it held on multiple occasions throughout a 2-year period during 2020, 2021, and 2022. We finally lost it. And when we lost it, we saw one of the biggest red weekly candles we'd seen in the entire visible chart ever since May 2021. So it's a very strong level, and I'm not fully expecting to break it to the upside. You know, I look, if obviously if we see no more rate hikes, if we see the current rate as the max rate, we see no more hikes in 7 hours here, then there is a chance. But I'm personally not really expecting it to break, just because the sheer quantity of the resistance is massive. And, you know, if we're looking at volume profile as well, it's really a massive step up in a historical resistance. And we're in kind of a dip on the volume profile right now. We're fighting an uphill battle, you know, quite a massive uphill battle. With that said, we've made a lot of macro progress, and I certainly don't doubt the long-term strength of Bitcoin. I certainly do believe the bottom is in. But I think you get into a bit questionable territory when you start to think that, you know, you should be taking longs in this region. You certainly shouldn't be taking longs against one of the strongest resistance zones Bitcoin's faced for basically years, right? We've got decreasing volume on a daily chart, which represents our weakness in the upwards trend. We've got an ascending wedge formation, which is on the verge, on the absolute verge of a breakout, either up or down. It looks like it's just peaking to the downside a little bit here, but obviously an ascending wedge formation is very bearish as well. So I would expect probably Bitcoin to correct unless we see something unexpected with rates here. And I certainly will tell you this, right? There's not many circumstances in the market in which you can be objective, but I'll tell you this right now. Objectively speaking, it is unlikely that Bitcoin breaks above 28.6K without some sort of correction. Doesn't need to be a big correction, doesn't need to last months, but it's unlikely. Now, if we do that, if we do break above 28.6K, just understand that you had your eggs in the right basket if you were betting against it. There's certain circumstances in TA where you can really understand that when we've got a bearish divergence that's been going on for 2 months, when you've got an ascending wedge formation, when you've got volume decreasing, you know, when you've got Bitcoin massively diverging away from its major support zones, such as bull market support bands, such as 50 EMA, you can kind of understand that, hey, okay, maybe we need to take a step back here, maybe we need to see some healthy consolidation. But of course, in TA, nothing is certain, nothing is guaranteed. And the one thing I did look at yesterday, which I think a lot of people would find extremely interesting, and this is probably the one counter argument you can make. This is probably the one counter argument you can make there, and you can make the claim that, okay, Bitcoin's actually going to break upwards without a correction. You could kind of bring up this chart here. You could go to 2019, I think it is. Let me delete all these indicators so I can show you. You could go to 2019 and you could draw in, as you can see, roughly the same time period, an uptrending line, I think from around here. And you can see that Bitcoin in 2019, just like the 28.6k level we have now, had a major support level around 6k, okay? You also had an uptrending line stemming from before the bottom. You had a cup formation at the bottom. And when we broke that uptrending line to the upside, even though this was a major resistance at 6k, we didn't actually correct and we blasted right through it. You could make the case that Bitcoin is doing the exact same thing right now, okay? We had a cup formation, for example. We had an uptrending line, which I'll draw in. I think it's somewhere around here. I'm not going to be able to get it exactly correct. It's something like this. Uptrending line like that. Okay, and you could make the case, and we've got 28.6k up here, you could make the case that we will just bust right through it like we did in 2019 because we're in a very similar macro fractal. That is an argument you can make. But again, in TA, you need to weigh up both the arguments, right? Is it likely that a fractal plays out, or should we be trusting the actual current TA? I would say we should be trusting the actual current TA. And I think for someone who's a little bit skeptical, perhaps just sit on the sidelines. I'm not saying load up 100x shorts. I'm not saying that at all. I'm just saying it's probably not the time to be longing right now. You don't long into a major resistance that held a support for 2 years. It's just not something you do. You wait for it to break and then you're long. That's how you play the market in that regard there. So I'll say that. But yeah, 7 hours, guys, until FOMC decision. So keep an eye on that. I also want to bring up something that I think was pretty interesting because a lot of the bears have been saying recently, and maybe in my comment section saying, yeah, Wolf, this is all well and good, and your points are valid, but Wolf, what do you think about whales not buying? Well, whales are buying, okay? If you look at, I mean, it depends what you mean by whale, because look, when you're looking at on-chain charts, most people are probably generally getting them from random Twitter accounts with massive biases. They're not actually picking them up directly off the sources that you need to be picking up from. You can see there's different types of whales. There's whales of more than 10,000 Bitcoin. There's whales with more than 1,000 Bitcoin. There's whales of more than 100. And realistically, you can pick up any kind of random macro chart to make it fit your bias. For example, whales with less than 10,000 Bitcoin, okay, have been buying the entire bear market since November 2021, and especially during that final drop triggered by FTX and triggered by, what happened there? I can't quite remember, but triggered by one of those major black swan events we have that slips my mind right now. It's been a while. You know, whales have been buying on the right-hand side of the screen here, so that argument falls apart. And we've also got the same, you know, and then bringing up a second bias here, so that could be a bias there, a bullish bias for whales are buying. And then you can say the same thing about smaller accounts driving this move upwards. You know, people say, oh, but Wolf, retail doesn't have any money. Retail can't buy. Well, look at this chart on the left-hand side of the screen. You can see pretty clearly that the driving force of this move has been massively, you know, attributed to retail. So I think a lot of the bearish arguments are relying on macro trends that are unsustainable. They're relying on traditional market data that is being proven by the day to be less reliable than previously thought. And they're relying on random on-chain charts that you can easily cherry-pick to fit your bias. I do not think the bearish argument is strong. I simply do not. If anyone wants to try and debunk me, anyone wants to try and prove me wrong, give me actual data. Don't just say, oh, Wolf, no, 10K is coming soon because recession. It's like, I've already debunked that. I've already said why I don't think that's going to happen. Give me a reason why that's going to happen. Give me actual points and facts. Your opinion doesn't matter. In the same way my opinion doesn't matter, your opinion doesn't matter. What matters is the data I represent. It's very important to note that. My opinion, who gives a shit about my opinion? Who gives a fuck? No one cares. It's not my opinion that matters. It's the charts I display, the objective facts that I display. I'm giving you charts. I'm giving you data. Look, I'm giving you this. I'm giving you what's been done in the past and why it's not likely to happen in the future based on data regarding interest rates. I'm giving you lines on charts that are completely objective, that are not subjective. I can't make these lines up. That's what I'm giving you. So give me facts. If you want to try debunk me, if you want to try disprove what I'm saying, facts. I need data, I need facts, and I'm happy to respond to it once I get that. But opinion is just, throw it in the bin, who cares? So that's the video, guys. I hope you enjoyed it. Before we end the video, I'd appreciate if you stuck around for a second while I go through a couple of promotions. First of all, guys, BitGet exchange, 5 times the lower fees than Binance. I've personally used this exchange for over a year. Publicly on my YouTube channel, I've used it for like 9-10 months, but I've used it personally for over a year. I reached out to these guys for a partnership. They did not reach out to me. I genuinely do appreciate the exchange. I do love the exchange. Again, 5 times lower fees than Binance. It's got copy trading. It's got, they've released their reserves information. It's got a protection fund. It's got everything you really need on an exchange. And if you sign up using my referral link, which you can find in the description, you can get a 15% trading fee discount on the exchange for life, as well as access to an exclusive reward center. So go ahead and do that if you are interested. That's probably the best way you can help out the channel. If you want to help out yourself though, you can check out the Become a Trader 10-unit course. This course will teach you everything you need to know about TA, everything you need to know about data, about candlesticks, market patterns, indicators, everything you need to know about trading to begin with. And you can actually start trading, you can take it to a semi-professional level, and you can turn it from something you do on the side to something you do as career potentially. So this is the place to do it. Check out the description, check out the website. You can read up all about it here on the website, and you can ultimately email us with any questions you have at cryptoacademycourses@gmail.com. And then finally, guys, it's coming towards the end of Q1 here. And so we are coming up to releasing the VIP results for Q1 in about 8 or 9 days. But if you're interested in the VIP group before that happens, right, you can join up at any time. 100 USD for 3 months of membership, right? Essentially, we release altcoin trading signals every second day. If you're interested in that, go ahead and do that. Again, all that information is in the description. So thank you guys for watching the video. I really hope you enjoyed it. Let's see what happens with FOMC. It should be pretty interesting. I'll catch you in the next one. Cheers.